jail's not that bad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
Welcome back, guys, to More Than Speculation. This is our second episode in which it's just the two of us. So in today's topic, because it's not the inaugural episode anymore, we actually want to have a format that we think might be interesting for our listeners. We are going to be sharing a couple of the interesting topics and things that we find intriguing in the past couple of days or in the past week from crypto Twitter, from our friends, just from the little birdies that we've been hearing around. And we're just going to be chit-chat and like pretty much banter about it. So yeah, man, like before we kind of get into it, how's your week been, bro?
Been all right. A little bit excited for the scroll. I think that's coming up. It's so funny. Scroll been live and started the farming thing when my friends were coming in, left the space, came back in and asking me should they come back. And scroll has still been going on, so I'm pretty excited for it. Like I probably don't have that much, but like yeah.
Mm-hmm. Yeah, no, I mean like it's been so long since they sort of like did their entire program, and I remember they were like part of the, I would say like the Starkware ZK Sync cohort. It's like the same time period, but they decided to launch their token now out of all place. So I guess taking a step back a bit, want to share with our listeners. So one of the news item that just came out is that Binance just announced Scroll pre-market as its first ever pre-market listing. So this is interesting because the concept of pre-market has happened I would say like since like Avo and a couple other of like perp dexes kind of pioneered this concept before, and it has become sort of like this benchmark for traders out there to assess whenever a token is going to launch, whether it's going to be accurate or not. And so far, it's been pretty good. For instance, I think the pre-market for Eigen was indeed around 6 to 7 billion, and it launched around that price point. So it would be even more interesting when Binance, like the number one exchange to go to exchange for everybody, is also going to start doing pre-market listings. So I think now seems like everybody's just front running each other. It's getting earlier and earlier and earlier. One thing that is interesting that we want to talk about, I want to get your take on this, is what do you think about essentially the concept of listing fees for centralized exchanges? Let me give a more complete picture. So it's not just the basic listing fee, but we have been seeing that on crypto Twitter. There are a lot of criticisms towards Scroll saying that they're paying 5.5% of their token supply to basically the Binance ecosystem, right? Like it's not like a direct listing fee, but you have to stake either FD/USD or you have to stake BNB in order to be eligible for the airdrops for Scroll. And 5.5% in Scroll's last valuation, which was around roughly 2 bill-ish, that's 100 million in quote unquote listing fee. So that's the sort of like that's the first thing that I want to ask you about.
So like going back to the pre-market trading, right? So although I think I want to add my 2 cents on the pre-trading, because actually most of the pre-trading volume is only around 100 to 200k ish so far. I think the result has been proven so far, but like I just want to warn like guys that it's not that hard to, let's say, buy up the expectation price, to drive up the expectation price as, let's say, marketing purpose, hype purpose, or whatever. But obviously, I just want to, because like a lot of people have been asking me that. I used to use that to quote valuation and stuff. Then I realized people don't understand how does it work. So basically, there's you can imagine like a fake token that people think it's going to convert, and then based on the market making and the order book, the price just kind of goes up. There are different mechanisms on different decks. Some you have to put some collateral on it, some you don't, etc. But TLDR is to evaluate how trustworthy the price is. You gotta look at the trading volume, because that's the real money. And you can imagine, you can just picture, will someone spend that amount to drive up the price or push down the price based on what they need and what they want? Okay, back to 5.5% to Binance. Personally, I think it's fair. It's like tax, right? It's like the Binance tax. I wish you can do a little bit more fine tuning in terms of like, for example, each account cannot farm more than that amount, so it's a fair distribution towards Binance, etc. But I do think in general is like the Binance text to give to more people. What's the shame part is that you can have big whales farming most of them, where they would just dump it after. But if we can do some limiting, let's say each KYC account can only farm, let's say, at max pool, then that would be great. I'm not sure if it's implemented already, by the way. But if there is some mechanism that way, I think it's good. Most project wouldn't even give out 5.5%. And in the end of the day, it's just like your version of user acquisition cost, right? You can do a lot more mechanism design in there to improve it. For example, you get the token only if you bridge it to the chain, etc., etc. But it's just a business decision that works, kind of thing. Obviously, I think we can try to track it based on the trading volume of each sex after launching, kind of thing. But like, it's one of those things that what others can they do? Like, people will criticize it, right? But if you go into their shoes, that 5.5%, where would you have put it in? If you have to put it, you're gonna put it purely on chain.
More airdrops.
but I mean, yeah. If you think like, I don't know, I think it's like airdrop is like 7% and 5.5% for sex, right? Then yeah, it makes sense. Like 7% for the on-chain degen, 5% for the centralized trader, like to gain awareness, kind of thing. But yeah, why not, right?
Yeah. No, like I think that's a very fair point, and I want to lay out a few more arguments and information here for our listeners. For those of you who are listening on Spotify or on Apple Podcast, if you go to our YouTube video, sometimes we're sharing screens and
follow us.
So I'm gonna be sharing my screen. So if you're listening on podcast, go over to YouTube and follow us. You can find us at more than speculation. So I do want to give Scroll some credit. Frankly speaking, like I haven't been using Scroll at all, in like Q1, Q2 this year. But you can see on DeFi Llama that they've indeed put in some work. They have increased their TVL from like what here? You can see my screen, right?
Yeah. Perfectly.
They have grown their TVL from around 20 million in early 2024 to basically starting in May. It started to go up. And now it's sitting at around 700 million. Without shilling too much, there's actually like there's a friend that I know that joined Scroll and I think helped them did this. So I do want to give them credits with this. And what's also interesting is let me see here. There is a scenario analysis from Olympio on crypto Twitter, basically, that's sort of like trying to analyze the marks. Marks are points for Scroll, by the way, for the listeners, and essentially trying to guesstimate, make an educated guess on what will be the launch valuation for Scroll. And I think a lot of people pretty much are on the same page that it should be somewhere between ARP and optimism, but I think that's still a very bullish sort of like forecast, given the fact that Arbitrum has more than 2 billion in like TVL, but Scroll at 740 is actually much better than Starknet and ZK Sync. So that's
not very
that's interesting.
I don't want to talk shit, but like, yeah.
Have you used any interesting apps on Scroll by any chance?
So here's my. So let me see how to structure this. Okay, so I think they're doing very well in terms of TVL metrics. They're doing very well in TVL metrics because they're doing a lot of strategies on looping different types of LST, LRT, Bitcoin restaking, etc., which is good, and which are metrics that I think would be able to help on centralized trading. But the on-chain guys will think that, everyone is just leverage farming. In terms of interesting DApps, they are able to onboard, let's say, tranches, which is something that is like, you can imagine like a yield tranches thing that you can get some fix or different types of yield from BNB initially, which is quite kudos to get them on. They have the typical lending to loop, which is the typical farming if you're bullish on scroll marks and you want to leverage from other marks and other points as well, which will be very beneficial. This is something that I think in terms of the launch strategies, they did very well, because like as a farmer, if you're gonna farm certain points, let's say solve points, whatever other points, you might as well do it there, so you can double dip on the points. A lot of the time it's like, why not, kind of thing. And they also have a very good leverage protocol that's called Pencil. Although the token price and the launch is very not exciting, but it was a good use of a leverage strategy to farm points on leverage. So essentially you can is like a borrow and lending protocol where you just leverage farm up points, but the Pencil token is a bit like it just went and then but it was, if you consider it as a tool to farm scroll points, is why not, right? But yeah, in terms of interesting DApps, I think there are some things like the Rolly Finance, and there's some a little bit more smaller ones. I don't want to like kind of shield by mistake, but to be very honest, I think ZK Sync did a slightly better job in building a different ecosystem. So they have like
so it's more unique per se.
Yeah. And they have more altcoins in some sense. Like they have the altcoin of different dexes, different lending market, a few perks, and a few things, right? But I think the market don't really care about that right now. Proven example of like ZK Sync's price and activity. But yeah, so right now to me, Scroll is a relatively basic chain that has basic stuff without a unique selling point of DApps. The more interesting things are Rolly Finance, Lazy Alter, and a few things. But again, there's a small twist on things. There's not something like, you know how Blast has very interesting DApps like Fantasy Top, etc., etc. But like, it's quite clear to me that the market is not pricing interesting like as much as before. So it'll be interesting to see how, when they launch, all the TVL data will it leak out like ZK Sync, or will it be will the centralized price sustain because it gets all the right metric correct? If that makes sense.
I think that's a very interesting point of view there that you just shared, because the early L2s like OP and ARP, they're just focusing on general applications, and then as we see 40 other L2s go to the market, the newer ones have a very specific focus, like abstract, right? And I think what's interesting with Scroll is that they were part of the older-ish generation, but then they're launching in a new-ish environment. So I guess we'll have to see how they will perform. I do want to segue into one of your thing, man. Like, why do you like yield farming so much? It seems like you knew a lot about even like Scroll, right? Like, I thought you weren't even using it, but then actually you knew a lot.
So to me, yield farming is like basic maths. Most people would say, yield farming, it's just 10%, 5%, 20%, like fuck that. But it's like learning how to pick money off the floor. It's like once you know how to bend down and pick the money, you can repeatedly do it every time, every day. So that's like something that I think is an essential skill. If you're free, just spend like maybe 2-3 weeks to understand the concept. Then you can start picking up money everywhere. And it's actually the return is higher than expected, right? So, in my opinion, there's a few phases in yield farming and using the apps. The first phase is that in bear market, like 2023 or somewhere like a bear or sideways market-ish, before everything pump, if you were to farm the incentives and hold the incentives, let's say something like Sway, I was farming it around 7 cents and more of that. And then right now it's $2. So you might think like 20% or 15 to 20% on stablecoin yield farming on protocols like, again, I don't want to mention too many protocols, but yeah, on those lending and etc., you might not think it's a lot. But like, if you hold it for 9 months, given that if it pumps like Sway, it's actually like 60% APR for the past 6 months. So like, I've been farming on Sway network, Say network, all those kind of stuff, which the token price has been outperforming randomly, and then the APR is actually 40% for the past 6 months. So it's pretty good. And the second thing is like, by actively yield farming or using the chain, you can actually see how well they're running it. And that's why I liked Sway, and I've been chilling it within my Telegram groups and sometimes on my Twitter. Not as much on Twitter because I worry that I get shit wrong, but on my Telegram group I mention sometimes. It's just like yield farming is probably the best use case of using a chain. And then you can just tell how supportive they are towards the DApps, how much heart they put into running a chain. And typically, when the market picks up, those are the chain that actually works, kind of thing.
#grand.
Yeah. I mean, it's true. It's true. You can see how effective are they deploying the grant. To be very honest with you.
Yeah,
Yeah.
yeah. No, like I do think that like I know a lot of people like criticize, I guess, these kind of programs, but I think it's all about finding balance. And as you said, so it's a very competitive market out there. So as I guess like as retail traders, it like people often underestimate this, and you're right. And we did touch a bit on this. I'm not gonna recap it because we did talk about it in our first episode. But basically, like buying Mudang at $3 million market cap, you might be able to put in almost your entire stack across different farmings, right? And that's like 20, 30, 40% of your entire book. Anyway, I do want to take a step back a bit before we move on to other topics. I want to talk about the whole CX DEX listing dynamics with regards to scroll. And I think this is very interesting because that announcement from Binance came at the same time with the latest Arthur Hayes article, which he titled PvP, right? And Arthur Hayes, founder of BitMEX, blah, blah, for those of you who aren't as aware, very, very OG in the space. And he writes a blog every 2 weeks, basically, on his Substack. And the latest one basically argues that listings on CX, even the top ones like Binance, have resulted in downward price performance, and almost all of the altcoins that have been listed in 2024 are down. In fact, another person on CT before has made this table that shows, I think, if I wasn't mistaken, like a few months ago, only like Jupe and one other token was like slightly up by like 5 to 15%. So Arthur's argument here is pretty much that the number one thing that you can do as a project for your community is to make your token holders rich, right? And that means that you have to launch at a much lower valuation. Either you can, either right now, because most of the tokens that have been launched in 2024 are down like 40, 50%. So it's either a sign that projects need to list at 40 to 50% lower val at DCX, or they need to go to the DEX route first. And his argument here is that in the article, he outlines the fact that it might be a good idea to basically launch your token as fast as possible on DEXs first, right? And then your product doesn't have to be complete, in a sense that the public markets who are buying your tokens maybe at like less than 100 million FDV are taking a risk that you will continuously focus on your product development. And eventually, when you get enough traction, the top 1, 2, 3, 4, 5 CX by volume will list your token organically, because now there's actually volume and interest and community going up, right? Whereas the other hand, like if your entire focus, and again, Arthur also outlines this in his piece, is that he has gotten outreach from his port co-founders and friends, like, do you know anybody that can help with Binance listing? Because right now, the whole premise, it seems that it's either Binance or bust. Like, if you're not on Binance, you're not going to be able to get the billion FDV plus valuation. So I want to pause there first and kind of get your take on that.
Okay. First off, I want to say I'm a very big fanboy of Arthur because I like investors that's in touch with the market and just not like bullshit theory based. So to say that, my counter argument is there's no one right way to fit everything. So there's a few ticks in this. First is there's a fundamental reason why projects are listing at a high valuation, is because they need to raise money for runway based on survival. Obviously, some ridiculous one is purely for profit driven. But if you think about that, let's say I need to raise, let's say 4 mil for a 2-year runway is fair, to be honest. And that means your valuation is typically at 20 to 50 mil in a fair statement.
Yep.
So for a 2-year runway. Then if you were to get listed to raise money at that valuation, you had to do that. And then when you launch, you typically need to be 70% or 100% of that previous round to make it justifiable for your investors. So that's why projects are at such a high valuation. So it really depends on your strategies, right? In the argument, you can say, fine, I'll launch at a very high FDV. People will dump me to zero, but because I have enough runway, I can come back, which has happened in some protocols. But obviously, in terms of from attention point of view, or from a retail trader point of view, you do want to prefer projects that are in a low valuation and just gradually you can join in, because essentially the valuation and the vesting schedule, etc., it has to be in trajectory of your growth. Like if people say your inflation, your vesting token or inflationary is, let's say, 20% in the first year or second year, fundamental or your buy volume has to be 20%, which is actually very difficult to sustain in some part. But the problem is, like, most crypto breakthrough doesn't happen like this. It actually happens like that, like bam,
Right.
like just like Pendo, right? Everything changed in 3 months for them once they started going arbitrage, etc. So like, again, it's just knowing. I agree everything you say, and you can apply in different case, but it depends on what angle are you looking at. Are you looking at from a VC check angle? Are you looking at a trader angle and short-term trade, long-term trade, etc. So yeah, that's just my 2 cents on this.
Pendle was a really good case that you brought up. I don't remember this, but was Pendle listed on any of the tier 1 CX even back then?
No, so Pendo basically, I forgot where it was listed because the liquidity wasn't that good. So I started playing around with Pendo token January 2023. I just want to say how early I am. But yeah, so the product
That's why you have to follow this pod. Eh?
That's right. The token were down like what, 50 to 80% basically. That basically it was a little bit like a shitcoin. Obviously, there's a few catalysts that I think it would do well for any yield markets. Then I started looking at it. The team were building a lot of things, and then they were able to capture GLP, and they were able to capture the LSD. Well, they looked like they are about to try to capture the LSD at the time. So it was a gamble that I took, because to me, they were down so much, but if they do it right, they can go up a lot, and the downside is probably quite low. So that was the trade. And obviously that is something that you can apply to a lot of projects or potential projects that might happen. But again, it's very difficult for teams to handle it this way. TN is an exceptional leader, which they can drag the team through the token down that much. They can continue to build hype, continue to keep the team spirit aligned, which is very difficult for a lot of people.
Yeah, like I do want to give credits to TN, yeah, because like I think the operational experience needed to sort of like pull that off is not something that's easy. And again, I want to expand my thought a bit about this topic, because I think it also depends on what kind of projects you are. Like if you're like an application, or if you're like a chain, if you're like an L2 or like an L1. Because like obviously, if you are your own ecosystem, if you're a chain layer project, then you need to raise a lot more, because you're competing in such an insane environment. In fact, I'm a little bit mixed of what I'm thinking about Arthur's argument here, because to me, once you launch a token, that's essentially like, it's a bit like going public, right? Like I think a lot of founders, especially founders who are extremely technical but not as capital market savvy, they sort of like think, oh, token is this like secondary thing that I don't really need to pay a lot of attention to. But it's like even Elon Musk is paying attention to his like equities. That's why he's he's like tweeting crazy shit and like sometimes like false promises and stuff like that, right? Yeah. Because like that's part of the capital market dynamics, even in the equities market. So I think if you launch your token a bit too early, it can also be like a double-edged sword, because now you have to think about basically the market makers, the volume, the listings, and even like marketing to traders and marketing to communities are two different things. So in a sense, it will give you a lot more things to worry about. Or at the same time, if you take the counter position to that, you can just launch it and you don't care and you do like minimum like maintenance work and just focus on your product. And that might work, but I think like,
Bro,
I know
it
it's
doesn't
not
work.
Sexy, perhaps.
Most purely in it for the tech project does not work.
Yeah. I was just gonna say it's not sexy for the listeners, but a lot of the times this kind of discussion, the core answer is somewhere in the middle per se. Like I think listings at billions of billions, and let's say like if you have raised your like Series A, even Series A extension, and then listing at like 3 to 5 times of your Series A val, right? Like that might be what has been causing a lot of the downward performance. But at the same time, if you list on Dexes first at like sub 100 million FDV, that might also be like too early for you. So like I think a lot of what the market needs is just like that sweet spot between that DEX's listing. Because honestly, if you looked at the Solana ecosystem, and again, not a dig on the Sol ecosystem, I love a lot of the founders there, but it is true that somehow, for some reason, a lot of the CX hasn't really touched Sol related coins. So their performance, even though there are a lot of great products, on an FDV basis, is much lower than like an ETH first, let's say, adjacent DeFi protocols, who might have like actually less users and like less TVL. So yeah.
But so let's say if you launch at a low FTV, right? But if your product has a certain marketing, has a certain product market fit and is doing well, you might end up looking like a pump and dump as well. Because the problem is, let's say if you launch at a lower valuation, but everyone is hyped, and then next thing you know, your price. Okay. Let's use this case. If you don't mind putting up a chart of Pendo. Pendo is not a pump and dump for sure. But what happens is that once you have product market fit, you want your price just goes up so high suddenly because everyone just get FOMO and people goes out as well. If you look in through 1 year, like to a lot of people, this might look like some pump and dump project as well if you don't look at the brand. It's like, do you want your price exploration in the public, which it might hurt a lot of retail as well? Or do you want it in the private and launch at the phase where you can control the inflation? In some sense, if you do it in public, you might have some diehard cults to support and go with your brand. But if you do it private investing, if you need to get the right people, you can handpick the right people to make sure they are aligned with you in a sense where they wouldn't just dump early like the certain investor in Iden Layer this week or something.
Right.
But yeah. So it's like, it's just approaches. It's like picking the right girlfriend kind of thing. There's no right and wrong. It's just whatever fits you.
I fully agree. I think it's basically like a good balance of like trying, if you can, and I know there are always like external factors. It's a good balance of like slowly making sure that like the interest and the, I guess, in some sense also the price in the private markets, and how do you kind of like translate that into the public markets, right? Like, I mean, we have seen the same thing with like stocks, dude. Like Uber took 10 years until they're actually above like their listing price. So like it's like basically there's like a sweet spot between this, and there's no one size fit all answer. So what's an interesting thing?
Sorry. I talk about FDV coins and all this kind of stuff and reborning in product market fit. I actually have a few things that I've been looking at lately, and I feel like that was your next question as well. Before Solana came back, I actually have a very strong thesis on no L1 or L2 that failed can come back. Because if you think about it, right, other than Ethereum, no L1 or L2, once they dropped, have made a strong comeback, and so is the first one.
Algorand.
Yeah. I mean, they do very nice ads. I like the ads, but that's about it. but maybe they're just going for a different approach. But what I'm saying is like I never like, okay, so there are a lot of L2s that are doing very well, sustaining in the level, but no one made a comeback with Solana. So that's why my Solana bags was never big. I have some and I play around with it, but yeah, it was just because it was something that was against my motto. I don't know if you remember EOS, Neos, those guys never come back. So again, but because of this, I feel like a lot of people will start accepting there will be like L1s and L2s can make a comeback basically. In that direction, I started looking at FTM, now called Sonic. So essentially, they're trying to they rebrand it. They have some new incentives coming into play. I haven't read it in detail yet, but like I'm starting to look at these comeback teams, which has proven strong team members, execution, and the bear market kind of just wrecked them, and they're trying to make a comeback kind of thing. So like there are a few more that is going to this. So maybe for me, it's like potentially it can be Phantom. Sway is already becoming the second Solana. I think people are saying that on Twitter. They're doing a lot of good things. Say they never dropped, but they're doing a lot of programs and etc. that potentially and there's one of those things that it was a very good farm. Like you can tell the foundation is working, and let's hope that their ecosystem will continue to build. Then the next one is, might be a controversial take, is Clayton. Basically, I'm hoping it can be the next ton. TLDR, they are down 97% from top, I think. but they have the Kakao Talk and the Line, which is like the Asia top chatting apps.
Messaging apps, yeah.
Yeah, messaging apps. They have recently issued some grant programs, some merger, etc., etc. I haven't gone down the rabbit hole very deeply yet, but basically you can imagine this can be potentially the next ton play. And in my opinion, this is like the risk and reward play, right? Like, it's already down 97%. Like, I mean, bro, how much lower can it go? And then if this goes...
Yo, I was in... No, like that's true, but I was in Bowdoin. It was down 90%. It was down 90% again.
Okay. Again, not financial advice, but this is just some small bets.
Right.
I am trying to show you guys to buy it. But yeah.
No, but let's expand a bit on this. Like, I am bullish on Drake for sure. I was actually also looking at Sonic, and again, not financial advice, no holdings right now or whatsoever on me personally, but he's definitely one of the few guys that at least always tinker with interesting DeFi primitives and, like just like more like mechanism designs. I mean, Aerodrome and like Velodrome was like literally like significantly inspired by his designs, right? And they're very, very successful right now. So I'm very interested in that. Clayton, interesting, like. Sorry.
So like I think So I am so ready to farm it, but I am not ready to buy FTM token because DeFi is currently not in the best state and an attention span. Secondly is that I love all his design. I love his personality. I know he doesn't do any insider stuff to trade. But the problem is, I think there are a lot of people that got hurt by mistake that wouldn't buy FTM because of that. So like my strategy right now is to farm and use the ecosystem and potentially decide should I buy more FTM kind of thing. But like I'm scared as well because I was one of the guys that got hurt mistakenly.
Got it. You know what? Let's actually, instead of expanding to the other assets that we just talked about, let's drill down a bit on like FTM and this concept of like a dead L1 coming back to life, right? In your opinion,
not dead, sleeping.
Okay. Sleeping L1s coming back to life. Okay, got it. In your opinion, what are the, I guess, like 1, 2, 3 factors that would really help, like an L1 that has been underperforming to like come back and like either I'm just really curious on your take on like when you see Solana, like what do you think they have done right that other L1s can learn from, basically?
I think as an L1, from my angle, I think there's a few things that you need to approach. The first part is you need to have a unique selling point. The unique selling point can be ETH killer. I'm using some examples that people can relate. The ETH killers, the quicker, faster, the most DApp friendly, like the multi-language. You need one-liner so people that understands it. Like Fire Dancer, no one understand what that is in deep, but they just say, oh, faster. We want to be the NASDAQ of on-chain. So that's like the marketing angle. Secondly, you need to create a metric that works for you. It can be TVL, it can be number of DApps, it can be number of developers, it can be on-chain value, transaction, etc., etc. there. And then there is catering to different users. So let's say Injective, right? Injective's ecosystem is actually relatively low. But what they did was they were able to communicate with the trader circle very well. And their token is actually very high volume in some sense where it fits the trading community purely on Centralized and just trade the token. A bit like Litecoin actually. But yeah. So a lot of like trading community would trade it, but like as a lot of on-chain guys would just look at it like, oh shit, I don't know what can I do with it kind of thing. But again, it's just catering the right thing to the right people. Then there are on-chain communities, which is like blasted very well in terms of doing a lot of mini games, a lot of things that people on-chainly like. Same with Ethereum, same with Solana. Then there is like the liquid fund manager angle where what's going to happen next? Is it going to be the next ton? Is it going to be the next mass adoption? Is it going to be the next GameFi chain? Blah, blah, blah. Which is something that I think Abstract Chain and Ton play really well in some sense that the angle is the mass adoption. Yeah. The pitch, basically. The pitch that makes sense. And then I think you can't do everything, but you need to pick your angle. For example, it can be, the best BTC L2 and the BTC money is going to come. The best chatting app, the chatting is going to come. Then you can define some metrics, for example, number of users. Then you gotta, and then you just got a narrative enough that people want to trade and use your token. So like Ton, right? I think most people here don't realize is that Ton sounds very hype. Token performance is great. DApp token performance is great. But if you look at the on-chain DeFi metrics, it's actually trash. Sorry, not trash. It's a little bit underperforming compared to a lot of chains trading at a much lower trading volume. So it's just the right audience to the right place, in my opinion.
Yeah, they like, I think that was fairly smart of them to not just focus on the generic DeFi apps, given, as you said, so right, the right audience and the right place. No, but this is super interesting. Like, we should definitely try to get like some foundation people up here. Hey,
Then
if
we
you're
should
listening
probably
and if you know anybody,
Then we should probably stop calling them dead chains.
Hey, that's engagement bait. But anyway.
Purely clickbait purpose.
Yeah, no, I mean, like, I think I kind of want to close this with the fact that there's a lot of effort to come back as a much stronger chains these days, because a lot of these L1s and L2s, they have actually raised a lot of money and they have a lot of firepower. But I think right now the market is mostly focusing on newer chains that haven't launched yet. And I think there will be like this interesting opportunities that might be overlooked from the older chains. So yeah, I'm just gonna leave it at that. Do you have any closing things you want to share, man?
Yeah. If you want to look at the older chains, check Treasury. Like Phantom actually have a very, very strong treasury. So you can look in the treasuries and look at the chains that are still working, but not just holding on treasury and pay the people. So like, and I think that's like something that you can look at. And the thing is, like, one last thing that I want to comment on is that people kept saying that paid marketing is shit, all those kind of stuff is shit, but it's actually an overblown topic in my opinion. And so like, I think Sway is getting this comment a lot by they're doing a lot of paid marketing, right? But to be honest, I think we should see it in a sense where it's paid marketing, that a message that the foundation want to deliver. And you just need to speculate on, is that message good enough? If that makes sense. It's like TV ads, right? I'm telling you that my product is very, very good, and this is the reason why.
I agree.
Same with everything. Same with buying a token. And don't overthink it. Like, just because Polkadot do very shit paid marketing doesn't mean Sway doing paid marketing is bad, kind of thing. But yeah, that's just
not shit. It's not shit. If you want to sponsor this podcast, I'm just kidding. But no, but I do have to give credit. You're right. A lot of people meme on Sui with the hashtag grant, but they were one of the few that literally at least have the disclosure. You know what I mean? Like, so you have to put hashtag grant. Like, at least the level of transparency, whether you like marketing or not, the disclosures are there. So we got to give credits to them. Yeah. All right, folks. That is it for this week's episode. If you have any questions, anything that you want to ask us, feel free to reach out on Twitter or on any other platforms that you might be able to find us. And until next time, cheers.
Take care, bro.